All right, everybody, let's do a quick 2 minute analysis of Pidilite industry. It's a shallow analysis. You should absolutely be doing a deep analysis of a company, or you should be taking advice from your financial advisor. This is a video just for educational purposes and just for discussion purposes. It's not an investment advice at all. So if you have to do a quick analysis of Pidilite industry, the tools that we will be using today is called Screener. We just screener.in. We'll go over there and we'll just click Pidilite Industries over there. All right. So in the Pidilite Industries, let's look at their fundamentals. The ROC is fair enough. It's not out of the world. It's good. It's not bad. 23.8%. ROE is 18.7%. The company has been growing at sales of 15% over a period of 5 years. Even because of all the challenges in the current economy, it has been growing at a 15%, which is fine. I would prefer any company which is more than 25% of sales growth every year. For the past 3 years, it has been 17.4%. Debt to equity ratio is great. It's 0.06. It means the company is not taking a lot of debt. And if you see, the debt is only 416 crores for a market cap company of 150,000 crores odd. If they are just taking 416 crores of debt, then that's a pretty healthy this thing. So and the operating profit margins. Let's look at the operating profit margins of how the company is operating profit margin is good enough. Earlier it was 28%, 21%. Then it has been coming down, but going up. But generally it is around 20 to more than 20%. So every $100 sales it makes, so $20 it is able to. So I'll keep switching between dollars and rupees because a lot of my viewers are from US and some are from India. So if for every $100 it is a sales it makes, it is able to save $20. So operating profit margin is fair enough. The sales have been consistently increasing over a period of time. There was a dip in the Corona period probably, but generally the sales have been on a upward trajectory, and that we have seen in the sales growth also over the last 5 years. So just quick look at the fundamentals, and one of the things that we should be looking at is how the promoters are behaving. The promoters are consistently having about 70% of the share of the company, so they have their neck into the they have their own stake in the company. So if the company does bad, then they are going to lose as well. So their share is also 70%. They are not reducing the share. That's good enough. And the cash flows have been very healthy. In fact, they have been increasing quite a lot over a period of time. So all the fundamentals are either they are good or they are not bad. Before coming to the stock PE and why this might not be a right time for investing in this company. Let's do a quick qualitative analysis also. Till now, we have been looking at the quantitative analysis of the things. If we do the qualitative analysis, Pidilite Industry is the company which makes Fevicol. About 52%, if you look at, about 53% of the revenues come from sale of adhesives. And one of the famous brands that you would have heard about is Fevicol. So anybody in India, if you want to do adhesives for the furnitures, every wood hands craftsman or any professional will be telling you that go for Fevicol, or everybody has a lot of brand recall value of Fevicol. In fact, for adhesives, they think Fevicol is the default product, and that is shown in the market share also. That 70% of the market share is dominated by Pidilite in this country, in India, for the adhesive business. So it is having a lot of competitive advantage, and customers love it. Everybody who has used Fevicol has no complaints about the product, and they want to use it again and again. So that is a quick qualitative analysis of the company. It is really great. great company. But is it a good company to buy at this price? The stock PE is about 87.7, which is pretty high. So it is making the earnings, but price to earnings ratio is fairly high. In fact, if we compare it to the industry PE, it is almost double. All right, and even if we adjust to the dividend, this company gives really great dividend. Okay, but if we adjust the EPS or EPS according to the dividend payout, so for every $100, it's giving about 50 rupees to the shareholders. So if we take that EPS is going to grow by that much amount, then about it will be having 30 more rupees of EPS. Let's just increase the EPS by twice. So if we increase the EPS by twice, the stock PE will come down by that much amount. So around 50 is the adjusted stock PE. If we consider the dividend payout, and let's say that the company doesn't give any dividend to the customers, how much it is earnings per share. So we adjust EPS accordingly. Then the stock PE is still 50, which is fairly high. So what does it tell you about the company? The company is great. The fundamentals are not bad, but still, at the current price, it may not be a good investment right now. Maybe you should be doing further deep analysis. This is no way a discouragement of anybody who wants to buy Pidilite Industries. This is just this thing that, okay, do more analysis before going into this, or take the advice of your financial advisor. But the stock P is fairly high for this company right now, and maybe you should be putting it in a watch list. And whenever the price comes down, at that time, you should be considering this company. So that's a quick 2-minute analysis of Pidilite Industries. And we'll keep on doing the 2-minute analysis of such companies. You can comment the company that you want the 2-minute analysis on. And if you like the fundamental analysis of such companies, like in this video, then you can like, subscribe, and share.